Hi friends, welcome to my YouTube channel SS Analysis. First of all, I would like to tell you that if you are watching this video first time, subscribe my YouTube channel to see my more upcoming videos on analysis of different commodities and equity indices. And second important thing is to watch this video till its end to understand this story to take your decision. Your one like will motivate me to be regular in working more hard for you. Let us start the day to analyze the movement of Nifty futures in different time frames, but before proceeding further, let us understand the background of some of the latest developments on different issues at international level and national level too, which may directly or indirectly may impact the movement of Nifty futures well from the first trading session of the upcoming week. At the international level, if we have a look at the closing levels of global equity markets, most of the European equity markets ended higher because they had closed before the China reacted on the trade war front. But while the US equity indices were also trading higher on Friday, as the President Mr. Donald Trump offered some hopes on a quick resolution to US-China trade war, but a warning from Beijing that it is not about launching further countermeasures against Washington kept gains in check. When the US President Mr. Donald Trump said that if we made a deal, I could imagine Hawaii Technologies will possibly be included in some form or the other, or there may be some part of it may be involved. But Trump did not completely shut the door on renewing restrictions on Hawaii Technologies. He said that the Chinese tech giant was very dangerous from a security standpoint. Earlier this week, the US Commerce Department rolled back some of the restrictions placed on Hawaii Technologies for 90 days. On the other hand, growing tensions between the United States and Iran may extend bearish pressure upon the global equity markets during the upcoming week. Secondly, if we look at the national level, election euphoria has become over now, and the Indian equity markets have already started to shift their focus since May 23rd from political joy to economic realities, which is evident from the slumping moves in Indian equity indices before the weekly closing. Therefore, I find that these exhaustive candles look evident enough for growing bearish pressure on Indian equities. No doubt that the return of the NDA once again in power in the leadership of Prime Minister Mr. Narendra Modi will have to resolve plethora of economic realities to strengthen the country, where the growing fiscal deficit and well the unemployment deficit will have to be taken care of on priorities basis. Otherwise, the Indian equity markets will have no reasons to rejoice if they find that a constructive work to strengthen Indian economy if remain absent once again when the same government has returned in power. Therefore, I find the special attention of the PMO is particularly required to resolve the growing NPAs of Indian public sector banks rather than focus on interest rate cut. Now, the need of the hour is to work on rural sector too with more dedication for job creations, for development of agricultural production and supply methodologies, to encourage farmers to look after their crop production, because only by strengthening rural sector Indian economy may be made more strengthened for moving upward amid growing fear of global economic slowdown. Now let us have a look at the movement of Nifty futures, where I find that the Nifty futures touched the highs of this decisive zone, where after touching the upper end of this decisive zone, here we can see an exhaustion which persisted on the last trading session of the week. Let me zoom this portion for you. Here you can see that the Nifty futures touched the highs of 12,048 when the huge sell-off started, and we witnessed the Nifty futures to turn back up to these levels, whereas on May 24th, once again, when the PM Mr. Narendra Modi won the election with clear majority, once again the Nifty futures tried to bump up, but once again they faced a stiff resistance at these levels, where we find that still they are facing good resistance at these levels. Therefore, I find that now the Nifty futures have closed the lower end of this decisive zone, which I explained in my previous analysis, and now we will have to keep a visible eye over the opening levels of Nifty futures on the first trading session of the upcoming week. I find that if the Nifty futures find a gap down opening below the level of 11,700, we will see the Nifty futures to come once again under bearish pressure, where we will find Nifty bears to go short because the FIs and DIs have been constantly selling Nifty options from a long time. No doubt that we may see once again Nifty futures to test these levels, but here this is the reason where the bulls are trapped in a higher move, especially when we do not have any reason now to rejoice, which may keep the bullish trend intact during the upcoming week. Therefore, I find that the Nifty futures may see one more exhaustive candle in a daily chart here, and I am sure that if the same candle is formed on the first trading session of the week, if the Nifty futures find an opening at the level of 11,822, started to move downward and form an exhaustive candle here on the first trading session, we will see the Nifty futures to move downward like they did in the beginning of May 2019. Therefore, I find the Nifty futures may come down up to the levels of 11,000 within next few trading sessions, where the 200 days moving average will provide good support, where they may find an upward move up to these levels, up to the level of 11,500, but the bearish pressure will remain intact above this level. Friends, as I have already discussed about my resistance and support levels in my previous analysis, these are my resistance levels where the Nifty futures tried to cross this first resistance but faced stiff resistance at resistance level 2. Therefore, I find we hardly have any reason to test the third resistance. Therefore, I find that if the Nifty futures find a gap down opening, no doubt that the Nifty futures will remain under growing bearish pressure, as we have already discussed the current economic and geopolitical scenario at the international level and well at the national level, which may keep the Nifty futures in heavy selling pressures during the upcoming week. Therefore, I find if the Nifty futures enter into this downward trend, which starts from the level of 11,500, we'll see the Nifty futures to break this immediate support at 11,394, where a downward move will find first support at these levels. And if the Nifty futures break this support levels, I have marked some more support levels for the Nifty futures. But if we find Nifty futures to take a reversal after touching the 200 days moving average, we'll see then the Nifty futures will find all these support levels will turn into resistance levels, because all these levels will provide stiff resistance. If the Nifty futures move downward up to these levels, we will find that on every upward move, Nifty futures will face strong sell off on these levels. Therefore, I find that the overall trend may remain bearish during the upcoming week. Now, let us have a look at the movement of Nifty futures in 4-hour time frame, where I discussed this decisive zone for the previous week for Nifty futures, where I explained how a breakout from either end will decide the final direction move of Nifty futures. Therefore, here you can see that on May 23rd, Nifty futures have come out of this decision zone on the lower side, where after finding the support at the 200 days moving average, once again they tried to move upward when the news came that the NDA has come back into power. Therefore, this was the reason which encouraged Nifty bulls to go long. But once again they faced a lot of sell-off from these levels where an immediate resistance is there. And if we have a look at the current position of moving averages, here you can see that the 20 days exponential moving average is below the 20 days moving average, which indicates the weakness in short term, whereas the 50 days exponential moving average is well above the 50 days moving average, which shows the long term is still intact. But if we find no further reasons to keep the bulls remain intact, I find that the Nifty futures will definitely move downward in short term, and I find that a downward move below these levels will encourage Nifty bears to go short from these levels, and I find that a downward move below the level of 11,000 will keep the bearish trend intact, as we have seen the growing economic concern at the global level is evident enough to enhance the bearish pressure on global equity markets, where a slump in global equity market will result in more bearish pressure in Nifty futures. Therefore, I find that this decisive zone has finally decided the further directional move of Nifty futures. Now let us have a look at the movement of Nifty 50 in a daily chart. Here you can see that after touching the highs of 12,037, Nifty 50 moved downward, where it resulted in formation of this exhaustive candle on May 23rd. When the final election result came out, we witnessed a sharp downward move in Nifty. Once again the Nifty tried to bounce back but found a stiff resistance at the level of 11,858, where I find that the Nifty will face stiff resistance on every upward move. No doubt that some short covering may keep one more upward move, but overall trend looks bearish because we hardly have any reason to bounce from these levels due to growing non-performing assets of banks, and whereas on the international front, growing geopolitical tension and the tariff trade war will encourage bearish pressure in Nifty during the upcoming week. Therefore, I find that a downward move in Nifty below these levels, below the level of 11,300, will once again encourage Nifty bears to go short in Nifty, and I find that Nifty may find some support at the level of 11,000, where the Nifty may find an upward move up to these levels. But once again the downward moves will be there, and I find that the Nifty may remain under bearish pressure during the upcoming week, and I find that a downward move may break the levels of 10,300 on the downside, because the upside is capped in Nifty at the level of 12,091, where I find the Nifty has hardly any reason to bump from these levels, and I find that a gap down opening on the first trading session of the upcoming week below the levels of 11,600 will keep the Nifty in more bearish pressure during the upcoming week. On the lower side, first immediate support will be provided by 200 days moving average, which is currently at the level of 11,064, from where we may find a bounce back up to these levels, but downward trend is likely to continue in Nifty during the upcoming week. So friends, thanks for watching this video. If you like this video, don't forget to share this video with your more and more friends. Thank you.